So today I'm going to show you guys a great example of how supply and demand works. So without wasting any time, let's get right into it. First of all, what I want to show you is how previous supply can turn into new demand. We're going to look at the top of this range here. As you can see, we got a ranging bar candle, bars here. And if we extend it along, we see a bounce here. Now, price went down, but price just went right through the supply area. It didn't give us any entry signals to take this trade as a short. However, once we did get past this, we can see how price is still reacting to this area. So this is still an area of interest. We still have the possibility of taking a trade here, but instead it being a long trade because supply has now turned into demand. We know that supply has turned into demand here because of these big wicks on the candle. We know that this is an area of interest simply because of the ranging bars on this side here. And even though it's broken through here, it's good to keep watch of it because as you can see, the long wicks on these candles here show that buyers are really seeing this as a key area of withholding price to push it back up. So once we see these big candles, we can find an entry and take a trade. And as you can see, this trade did immensely well. If you could have profited probably somewhere around 4%, and that is with a risk to reward ratio of 2.5 if you would have just put your stop loss just below the previous low. So a pretty good entry and a pretty good outcome. Now, the more times a supply or demand area is hit, the less likely it is to react. However, if we extend this now new demand zone over, you can see that that's not always the case. Now, you need to be wary when doing this and extending it over because there is still a high chance that you find that the demand zone does not react and price just goes right through it. And as we can see, we got this big red candle that is almost like a big indicator that this isn't a valid demand zone. But we then see a lot of buying and selling with these big wicks and these undecided candles, followed by some green explosive movements, which you could have also taken a trade up here to around up to 6% profit with, I'd say if I was trading this and I got in around this area, it'd be a 1.4 risk to reward ratio. Personally, I wouldn't take that trade because I usually like to aim for around a 2-point risk to reward ratio. But it shows you that if you possibly found an entry down here, then you could have got a 2.3 risk to reward ratio, which is pretty good. And once again, you can see up here, there is a demand zone or a supply zone, and we do have a reaction on that. You can see where the wicks start to come in. So really, a key thing to look out for is wicks. Look at how long the wicks are. A lot of people, in my opinion, look over the wicks. They just look at the candles, they just see, oh, this candle's big, explosive movement. Good, that is a great thing to look at, and you should consider that as a factor. However, something that people don't really look at is, what are the wicks doing? Are the wicks growing? Are they long? Are they short? If they're long, then you know, well, let's say they're long on the top, like in this example here. If they're long, then you know that sellers are really pushing this price down. And if sellers are pushing the price down, then that means we are most likely in an area of interest, especially if we are in a supply zone like we are here. Now, there are going to be times where you're going to see candlesticks like this. You're not in a supply zone, or at least, well, you kind of are because there was a range here. Let me just draw this out for you. As you can see here, we do have what could be considered, if we had price around here, what would be a demand zone. But then once we hit the demand zone, we just get this big messy movement of the candles. And you could find an entry here. However, the big wicks and the undecided nature of the bar makes it hard to find an entry. There is possibly an entry, you could possibly find an entry. However, the fact that price isn't sticking largely within the demand zone means that there is a strong battle between buyers and sellers, and a very aggressive battle. So yes, there is still possibly an entry, but if you're seeing that the battle between buyers and sellers is aggressive, that means the demand zone or supply zone is less likely to withhold. My apologies, the demand zone is less likely to hold. So you got to watch out for that. See how the candlesticks are reacting. Yes, you want to see big wicks, but you don't want the wicks to be wiping out the supply or demand zone. This is probably one of the best examples here. You see big price movements up, you get these big bars, and then you see the bars start to shorten, and you see the wicks start to grow, and then you start seeing this undecided nature with the wicks and the candlesticks not being too big and also largely remaining within the supply zone up here, making it a great opportunity to take a trade. Which, as you can see here, if we put our stop loss just above the previous high, And if we, let's say, put our take profit down to, let's put it around to here, because I'd say that's largely where the demand zone starts. I'd say the top here, so anywhere between here, and if we move along, we don't get a good trade, but you're going to have winners, you're going to have losses. That's part of the game. Even still, you could have done this, where if you did deem this to be, personally I wouldn't, I would have lost this trade. However, if you did deem this to be a supply demand zone, it did stop here. You do see price is reacting here, it's just too messy to find an entry. So you can see how supply and demand zones are working. So if we take this example here, as we see price is ranging here, so we got this big move up, followed by price slowing down, the wicks are getting big, and then we have this big undecided, well not big, we have this ranging undecided movement of which way do the bars go. Now initially we do get a tap here, which could be an entry. I think the entry would largely end up around here. Do we get anything more? Okay, price re-enters here. Let me just go back to the select tool and let's expand this. And that, here we go. See, massive growth. So could have found an entry, probably seeing how the bars play out in real time, maybe around here, and then coming and putting our stop loss just below the previous low of either the previous low here or the low of the demand zone, or the low or the high of the supply zone if you're doing a short, and then taking up to a possible 3.7% profit. So you can see in these 4 examples I've given you right here, we've got 3 winners and 1 loser with a very good controlled stop loss. That example would have been a 3.6 risk to reward ratio. So we would have made up to 5% or would have lost 1.4%, and in that scenario we did. In this example, we would have made up to 7.25%. This example, 4.15%, and this example, up to 3.7%. So you can really see how supply and demand zones do work as a great trading strategy that, if done correctly, you can win a large amount of the time. And you got to understand, a lot of people think you're going to find a supply and demand zone and it's going to react, and it has to react. That's not the case. You are going to have losers. That's why in these videos, I show you examples of where it doesn't work out. I show you in real time, me showing you the examples of this one works, this one didn't work. There's no sugarcoating it. Sometimes it's not going to work. And as traders, we need to be okay with that. We need to be, I've lost 1.4%, that's fine, but I've made 7.25% here. And while yes, I am on a daily time frame right now, you can apply this same to the 1 hour time frame, or same to the 15-minute time frame if that's what you like to trade. 2 things to remember in trading, especially with supply and demand. 1, identify supply and demand. Do you think that other people think there is supply and demand here? If so, that's a great confirmation of zone to be identified as supply and demand. Number 2 is entry signals. A lot of people think you have to look for certain patterns or certain setups, and while that can be a confirmation, the main thing I like to look at is what is price doing in real time. Am I looking at price and am I starting to see it start to pick up pace? Is it starting to grow quite rapidly? That is a great entry. If you see price start to pick up, especially if we're leaving a demand zone like in here, then you can take that as a form of entry. You want to see green bars, you want to see price start to either range and then start to turn in your direction. That's a good entry. That's why the bullish engulfing pattern is widely used as an entry confirmation. It's not because it's a star sign or because it's just a pattern that somehow works. There's a reason behind it. If you think about it, if there's a small red bar followed by a big green bar, then what the candle story is telling you is that price is not going lower, sellers are no longer in control, and buyers are taking over. You've got the small red bar showing you that sellers are no longer in control, sellers are dying off, and you've got the big green bar showing you that buyers are now taking over and pushing the price upwards. That's one of the key things I want you guys to take away from this video. What is the candle telling you? I'm going to do a full video on candle stories soon. What is the candle telling you? It's telling a story. What's the wick telling you? What's the body telling you? What's the previous candle telling you? The market is telling a story, and you've got to read that story.